So next aspect, we will move with the contract modification. Okay, so before we proceed with the contract modification, just we'll have a quick recap of what we have learned till now in this particular subject. So we all started with the 5-step model, which started with the contract. So contract had 5 conditions to be tested, and one of the main important condition is probability of the cash flow. Other things are fine, rights, okay, understanding the obligations and all those things. But can you calculate the cash flow? No, then you hold on. If at all you have received any advance payment, then there are 2 conditions for advance payment. Either the contract should have terminated, or you should have fulfilled your obligation and there is nothing else left. Now after this contract, you have to check the performance obligation. For this you have to check the promise. Promise you have to test at the product level, at the contract level, and both can be either for distinct or series of distinct. Now the series of distinct will, when you call it series of distinct, what is distinct? Distinct means something which customer can use on its own directly as it is, or use along with the available resources. So you may not be able to directly use it. Like for example, tender coconut. You may use it directly. How? You can go and keep it in the, for some puja, you can directly keep it. That is the direct use. Okay, if your objective is to drink it, you cannot drink it directly. So you can use the available, like if you have a knife at home, you can cut it and drink it. Then you call it distinct. You can use directly or use with available resources. Series of distinct is one which has got a substantial same pattern of transfer. Okay, and you have the same measurement progress. So substantial same when you say over the period of time. Now once you decided how many performance obligations are there, you have to decide the transaction price. Transaction price starts with the fixed price. Generally maximum will have a fixed price. Then you have got a variable element. So you will have a variable element. Then the transaction price consists of, okay, the moment you have got a variable, you have to constrain. Then you have got consideration payable to the customer. Then you have got significant financing component, which can happen based on the advance payment or on the EMI sale on the credit. Now consideration payable to the customer, there is nothing you need to check. And the last one is non-cash consideration. The non-cash consideration within the same line of business is not permitted, not considered as a sale. Okay, for this others we have to consider the fair value of the asset received. With this you fix your transaction price. The moment you fix your transaction price, if at all at a performance obligation level, if you had a multiple obligations, only and only then this step becomes applicable. Allocation. If you don't have a single performance obligation, headache is not there. It's the same performance obligation. So how do you allocate it? You allocate based on the SSP value. What is SSP? Okay, if SSP is not there, then we need RSP. We need RSP. How do you get RSP? Adjusted market approach, cost plus approach, residual approach. But there are 2 exceptions to these allocations. What are the 2 exceptions? Allocation of the discount and the variable consideration. Again, see, both you need not, because both are it doesn't depend on each other. First thing is you need to consider the discount. Is discount is applicable for a smaller bundle, 18 whatever this, you need to allocate that. No, SSP based. Is variable consideration specifically allocated to one item? No, SSP based. That means if both you cannot assign to smaller things or one particular performance obligations, then the treatment of both are same. Whether it is a discount or whether it is a variable consideration, If you see in principle, what do you say? What is variable consideration? You say that you are assigning to particular particular performance obligation. What is discount? You are assigning to particular bundle of variable performance obligation. So ultimately same. No? So you have to first think, can I assign at a smaller level rather than general distribution to all? Then you can, suppose one product has got both variable consideration, that means you can allocate to both the that performance obligation. See, there are 3 performance obligation. In that 3 performance obligation, the discount, okay, 1, 2, 3. Discount is applicable only for this. This is X, Y, and Z. Discount is applicable to this, and variable consideration also applicable to this. Then what you do? These 2 things together, you apply to Y and Z. Yeah, you can see, it doesn't matter, no, because whatever you do here, you do on the SSP of these people. So whether you first allocate variable consideration, whether you first allocate discount, that doesn't matter. Because ultimately both should get allocated, no. It's not that after this allocation, this value is going to change. We decided that SSP comes only once in its lifetime. Subsequent change in SSP is not going to result in any change in the allocations. What SSP have taken first, that only is going to consider throughout its life of the contract. Otherwise, accountant's life is going to become miserable then. Okay, so these are the 2 considerations. The last step, the beautiful step, is revenue recognition. To recognize revenue, what needs to happen? When you can recognize revenue? When you can recognize revenue? When PO is met. When PO is met? When the control is transferred. When the control is transferred. Then you have said that customer has got a right to use or direct or stop other person using it. So primarily when we say control, the control will be transferred over a period of time or at a point in time. Followed, no? So you maintain this in one chart. You should be able to explain entire chapter, and this is, you should do it. I will do it. I will try to do it. So that every time, do it. Every time you just see this. This is a small level of revision. Then go to the big chart. See it, that you get all the concepts interconnected and you will understand it. So this exercise has to happen, and each person has to do as per your understanding. Whatever you understand, the way you understand, it need not come in this fashion. Okay, you decide what way you need to do it. So clear? So now over a period of time, how many conditions? When do you say something is over the period of time? 1, the customer gets the as and when the work is done, the customer gets the benefit or consumes the benefit, or asset is created on which the customer gets the control, or what is the third condition? What are all the conditions of over the period of time? When do you say performance obligations? That's what first. Not control is received. The benefit is received as and when the performance is done. That's the first condition. You have to write the same language there. Because if you mix, no, see, evaluator will understand that you have not understood that. That's the first one. What is the second condition? Sorry? That is the third one. Anyhow, you can interchange, doesn't matter. As and when the asset is created, the control is obtained by the customer. Okay, you can say control is obtained, and the asset is created with no alternative use. And you have got a right to get the cash with the profit margin. And when you say at a point in time, okay, first of all, when you say over the period of time, no, is it or and condition? Any one if you fulfill, yes, that means none of this you fulfill, you call at a point of time. What about if you say sell this thing, what's that called, intellectual property right? There also there is a over a period of time and at a point in time. How many conditions are there? 3 conditions. Condition number 1. Okay, significant activities the license provider should carry on continuously. Second, exposure to any of the activities of the licensor. And the third, only license should have been transferred, nothing else should have been transferred. And when you say at the point in time, okay, now when you say over a period of time, when all the 3 are fulfilled, see here, if any one is fulfilled, you say over a period, but here when you say all the 3 are fulfilled, so if any one is not done, see here all the 3 should not have been done. If any one is not done, you say at a point in time. Okay, so this is all about what we learned. And then if it is over a period of time here, because at a point in time there is, we stop. The moment you deliver, you will claim the recognition, recognize the revenue. But if it is at a point in time, the revenue can be measured by 2 methods. Output method, input method. Now if you are going to follow input method, there is one, what is that called? One exception we can say to recognize the revenue. What is that? Abnormal cost should not be part of your input when you calculate the percentage of completion method. And the second one, recognize revenue up to cost. That AC and air conditioner example, when you are principal, when you are agent, this concept doesn't come into picture. Only when you are principal, you can recognize revenue up to cost. Okay, this is what we learned, right? Was there any other concept? No, with this, we finish the 5 steps. Okay. Then what we learned, we will not discuss what we learned in detail. Sorry? That's the variable consideration. Yeah, please ask me. Okay. Okay, now if the 50% of the work is done and customer says stop the work. Now what is your doubt? Then we say that, okay, now question comes, that's fine. But do you have this alternative use of this? Then no, at a point in time. Because if you have an alternative use, then you will divert it somewhere else. No. See, first of all, understand here, when you talk about this third condition to be fulfilled, it is asset should not have alternative use and you should get the right to compensation. And asset does not have alternative use means what? That you will tell, sir, I don't have any alternative use, but in reality there may be an alternative use. So again there are 2 conditions here, contractual restrictions or significant economic cost you have to incur to get rid of this whatever asset you have created. If you can get rid of it without free of cost, like a scrap, no, this condition is not fulfilled. Followed, no? See, again when they have drafted this standard, they have considered different industries, different. That's why they added certain conditions. Because some conditions are not applicable to some certain set of industries, but certain conditions are applicable to certain set. It is one standard for everyone in the world, no? Every seller in the world. That's why we have given so many conditions, so many exceptions. That exception because for somebody, their business practices requires that type of thing. That's why practical experience are given. So everybody will not go for that practical experience. Some particular industry, somebody needs that. They will only choose it. And in fact, what we are discussing is very base that you have to keep in mind. Real life, it is a very big standard. So many conditions, so many things are still there. If you just open the study material, you understand. But with this, what I am teaching you, with this, no, you get that confidence and get that structure to understand. You open any standard, you start getting connected directly, even though I have not taught you. Followed, no? Yes, anyhow, at this point of time is not your priority. You understand this sufficient. Okay. After these 5 steps, what did we learn? We learned special conditions. We will not discuss that much. What is that? What all the things we learned? Principal and agent we learned. Then sale with right to return. Options like discount coupon. Sorry, bill and hold. Because see, any question is going to come to you, it will be within this maximum 90%. Warranty we learned, where assurance warranty, service warranty. Then, sorry, that is sale and return, sale with the right to return. Loudly. Repurchase. Okay. Repurchase means what all the combination it can happen? Forward, put option, call option. Where call option and put option either is a lease or financing. Put option depends whether it is a sale with the right to return. And the last beautiful concept is the sale or usage based revenue for intellectual property rights. And we ended up with that question. That was the last question we solved. Now we will start with the contract modification. Now onwards, very small aspects. Now this contract modification, you get the flavor of 116. It's something very similar there. Now after the contract is entered, understand, see there are two things. One, you change in estimates, that is cumulative catch-up adjustment. The second one is the modification. That means originally it was not part of the contract, you enter into a fresh contract. Now problem is, since already you had got a contract, the second contract price may be given a discount, or my intention, I have got an intention to reduce my revenue because already I have made a good profit this time. So this contract, I will intentionally sell you at a lower price, so that by 31st March I will book low revenue. And the extra price I will push on to the subsequent contract, and this discussion, understanding happens with the client. Followed, no? So that in the next year I get a better, because I have achieved my target this time. I don't want any extra sale. So as a cushion, I will push this in the second contract. So first contract I will keep intentionally low. So how do I understand that second contract? Is it totally new contract? Is it having any relationship to the previous contract? I should evaluate, no? I should not give any option to them to manipulate. So how can I do that? For this, we have to apply certain rules. After the contract is entered, due to changes in the circumstances, party may demand for certain modification, and the contract modification shall not be recognized unless it is approved, obviously. Now, accounting can take three forms. It is a separate and a new contract. Just like in lease accounting, you got additional space at SSP. How do you treat that lease? New lease, not a remeasurement. Just like that, if you get a new product, distinct product at its SSP, it's a new contract. Or it can take a form, termination of the existing and creation of the new. Oh, because this is something connected to the existing. So what you do? Whatever contract you have done past, you just stop it. New contract you going to add to the balance of the old contract. Because of by this, I will stop them by getting that accounting effect by splitting the contract. And the third one, continuation of the existing contract, which is a cumulative catch-up adjustment. So what is the rules of modification? Simple. If you get additional distinct goods or series of distinct goods and it is matching to its SSP, like simple, you gave one contract, you ate masala dosa and idli. Suddenly you realize that you want to drink tea, but in the first order it was not there. When you place order for tea, at what price tea will be given to you? At its tea price. Followed, no? That means that order for tea is a separate contract. It has got no relation to the brief, because later you realized I had to change or my demand is different. So it's a normal contract. You need not worry. It is genuine day-to-day transaction. But sometimes it can happen that you asked additionally distinct goods or series of distinct goods like tea. but that tea is given free of cost. Why? Why complimentary, Baba? Then let me go and ask them, sir, please give me that, whatever you gave to that customer, no, give me also free of cost tea. No, they say that, look, Baba, I gave that free of cost to this person tea because he has already ordered masala dosa and idli. That means this price of this tea is loaded there. That's why what I should do, terminate that old contract, mix it, you club both together and create a new contract. Just add both. If that is not yet executed, say for example, idli and masala dosa is not yet delivered, well and good, add tea also to it. How many performance obligations? 3 performance, say for example, simplicity sake, 3 performance obligation, single contract price, distribute to the tea, all the 3. Now, there is no distinct goods or service only added on modification. Like for example, you tell this, what is that called, you wanted something like a tender coconut also. This hotel is not selling tender coconut. Now you go and tell this guy, who is that, the supplier, can you get me one tender coconut? He will give you that service. Is it distinct? In a sense, okay. Is it distinct in the sense, yeah, it is also a distinct as such. But if we assume that it is not a distinct, like something extra has been done, which generally they don't do it. Okay, that is also a distinct. Okay, I can say something like this. I can give you a better example. You ordered, like you tell them, look, give me after half an hour. You ordered idli and masala dosa. He is about to deliver you after in 5 minutes, but tell them, give me after half an hour. Is that half an hour extension of the contract, which is a modification, is it distinct? No, it's a part of this. So in that case, you have to apply continuation of existing contract, which is nothing but cumulative catch-up. That means you don't recognize such extensions, and because of this, he will tell you now, okay, if I have to extend, then 1 rupee extra you have to pay me for this masala dosa. That means it is not termination of the old. You just do the cumulative catch-up adjustment. You don't, because there is nothing new product to be recognized. No, to distribute into 3, that extension, is it a product? Is it a distinct product? No. So there is no question. If you order tea, tea is a distinct product. That's why you take the entire value and distribute to 3 items. But you paid now more than the transaction price for delaying by half an hour. But there in the contract there are only 2 things. Can you allocate it to half an hour? No, half an hour is not your distinct service. No. Understood? So that's it. So termination of the old contract in the series of distinct goods, if no requirement to perform the balance performance obligation, like there is a series, I have given the cleaning services. After 6 months, I will stop it. And I say, okay, give me these cleaning services there, and that is a bigger room. Now, if the series of distinct goods, if there is no requirement to perform the balance performance obligation, the moment I shift you to a bigger room, this room need not be cleaned. The modified contract value will be equal to the new modification. So whatever I have to pay you for next 6 months in the new room, that will be the value of the contract. In case there is a requirement to perform the balance obligation, like 6 months you have to continue doing this also, that also, the modified contract value will be outstanding performance obligation. That means 6 months value of this room plus 6 months value of the new room. So that you have to think what exactly terms and conditions they discuss. Now, continuation of the existing contract is the cumulative catch-up adjustment, as either increase or a decrease in the revenue will be recognized on YTD level or cumulative, but it is a revenue previously recognized will be adjusted. Yes, and the small contract cost is there. We will just discuss certain theory. There is no practical question. Practical questions are there, but much is theory based. So, have you understood the concept? Now you are ready to answer the examination questions. Okay. So first question we will go with this. This is an illustration number 7 question. An entity promises to sell 120 products to a customer for 1,20,000. That is 1,000 rupees per product. They are transferred to a customer over a 6 months period and transfer the control of each of the product at a point in time. What is the meaning of this? Is it over a period? No. That means, is it a series of distinct? See, don't say that. If it was a series of distinct, it should have been over a period of time. That means what you have told, maybe there is some modification or something. That means each delivery is considered as one distinct. What type of product it is, God knows. 120. Otherwise, see, genuinely, if you ask me, yeah, if it is an identical product, we don't know what type of product it is. If it is an identical product which you deliver over a 6 months period, it is one performance obligation for a series of distinct rules. But they only telling me, I don't know, leave it. What they give, final, no. Have they told me which company, which industry? No. Now, the after entity has transferred the control of 60 products to the customer, contract is modified to require delivery of additional 30 products. So, totally how much now? 120 original plus 30, 150 you take identical products. When it was identical, why did they say point in time? Okay, maybe it's the over a period of time only. Delivery is at a point in time, but it's one single performance obligation, maybe over a period of time. Delivery is at a point in time. Newspaper, we can say every day you deliver the newspaper, whatever it is. No, they say entity transfers each product at a point of time, means today one, tomorrow one. We can say newspaper. Best example is the newspaper. Every day one. Sorry? That's a series. That's why it is a series. It's not distinct. Because how do we know? Because they said it is the identical products. Otherwise, it would not have been series of distinct. Because to be series of distinct, it should be identical. Because substantially same pattern of transfer. Every day one you deliver. Now, the customer at a price of 950. Oh, additional 30 was given to you at 950, which is the SSP for additional products at that time, placing this additional order. The additional 30 products are not included in the initial contract. Why? That is why it becomes a modification. If it was already part of the original contract and you didn't know whether it is 120 or 150, then it would have been a variable consideration concept. But in the given case, original contract never had 30. Later it was amended. Now it is assumed that the original products are contracted at a price that reflects the SSP. As why this 50 rupees was given? Because since it is a subsequent contract, selling and distribution costs were not incurred by the supplier. That is why supplier agreed to give the customer at 950 rupees. Now how this contract has to be accounted? Not a separate contract. There are three ways. Any modification will land up in three ways. There is nothing fourth way. Either separate, termination, cumulative catch-up, or continuation. Separate. Why separate? Because they said very specifically here, see, why I gave you discount? I didn't give you discount because it is a genuine discount. Why I saved 50 rupees? Because you are not a first customer. It's SSP itself. That's why when you got additional products at its SSP at that point of time, maybe 1000 rupees was then 6 months back. Forget about this sentence. Today you sold at 950 and 950 is SSP at this point of time. Is this new contract or termination or a continuation? New contract. Because what the standard says, whenever you modify the contract and whenever you get that additional product, at that point of time, what is its SSP? And 950 is not actually 1000, it says SSP, but 950 is only for this customer because the supplier is going to save 50 rupees in sales and distribution. That's a genuine business case. So that's why it is a separation, it is a new contract. Only for the 30 products. Suppose, okay, but if I look somebody that you have given, you are the supplier, right? You have given to one customer at 950. By looking, can I come to you and ask, sir, for me also 950? No. You will give me 1000 only. Why? Then you give me an explanation. Sir, I gave him 950 because he is already my customer. His registration process, okay, delivery, what is that called? KYC, all those costs I am not going to incur every time. But when you are coming to me first time I'll increase. Okay, if you take this, next time I'll give you 950. Yeah, it is related, but what they are doing, they said very clearly, no, it is because of the additional selling cost you need not incur. That's a selling cost, no, that's a genuine. See, again, we cannot apply certain rules in its very literal sense. Always, that's why accounts is materiality based. It's all facts and circumstances, you have to apply your judgment. That's why audit itself is judgment based. So you have to think now what they are trying to do, because ultimately, whether it is the management or whether it is the auditor, both will look for what? Both will look for true and fair. Both will aim to have a true and fair presentation. What is true? What is fair? What is true? True, opposite of false. True means as per benchmark. What is fair? Which sits above truth. Because something can be truth, need not be fair. Which is acceptable. If I tell him the truth, is that acceptable in its literal sense? The Dharmaraya story, you know that, no, Mahabharata. Dharmaraya told Drona, Ashwatthama is dead. He told the truth. But later he told one more sentence. But whether it's your son or elephant, I don't know. When he knew actually, in fact, all this theme, and he pretended that at that time he really didn't knew. Followed, no? Is that acceptable? No. What he did was told was true, but it was not fair. But it is told that in love and war, everything is fair. Heard, no? You heard, no? That statement. War, everything is fair. Whatever you do, objective should be to win. Okay. So let us understand the very low probability for this question. Okay. So this question they may not ask you. So you simply say that additional product is a distinct goods and pricing will be SSP. Revenue should be recognized and contract will be separately accounted. Now this question is a highly probable question, because if you see, this question has come in so many RTP, it has come in RTP and MTP, and I have told you, important, it may come for 10 marks if it comes in the exam. Okay, please tell me. April 2011, S Limited enters into a contract with the Corp Limited to construct a heavy duty equipment for a consideration of 20 lakhs with the bonus of 2.5 if the equipment is completed within 24 months. Yes, very clearly one picture came into your mind. You understood it very well. Again, you need not analyze this. Okay. At the inception of the contract, S Limited correctly accounts the promised bundle of goods and services as a single performance obligation as per 115. Where is the bundle? That means this equipment must have certain distinct products at the product level, and you must have done one integration, and that is considered as a all story. Okay, simply to expand and keep one 4-sentence problem into 1-page problem. You should know now. At the inception of the contract, company expects the cost of 11 lakh and it concludes that it is highly probable that a significant reversal of the cumulative revenue will not occur. Cost to be 11 lakhs. So this is your estimated cost. Completion of heavy duty equipment is highly susceptible to factors outside the company's influence, mainly due to difficulty of supply of the components. Why they have given this sentence for? Probably for this bonus element. Fixed though you are definitely going to get, but bonus God knows, no, will you get or not. And for this they need to have that experience, and they said somewhere that company doesn't have that experience or something. Let us see, as we further proceed. Now this is when 1st April you got. On 31st March 2012, S Limited satisfied 65% of the performance obligation on the basis of cost to be incurred to date, and concludes that the variable consideration is still constrained as per 115. What do you mean by now? What is the transaction price? up to 31st March, what was the 20? Have they considered variable consideration? No. Because here only they said that certain factors are highly susceptible to their control. And here they said very clearly that it is still constrained. That means they have not yet considered for their transaction price. And this performance obligation is at a point of time or over a period of time. How many performance obligations are there? Single performance obligation at a point or over a period. How do you know? Bundle of goods need not, maybe at a point in time also, no? Because you said that you measure based on the cost incurred to date, cost to cost input method. And the cost to cost input method is applicable only for your over the period of time. Otherwise, you will not do that, no? However, on 4th of June 2012, now the contract is modified with the result that the fixed consideration expected cost is going to increase by 1.5 and 80,000 respectively. At that time, now at the end of the, after 1 year, somewhere customer got some idea about this equipment, because initially he didn't knew, no clue only how the equipment will look like. Then he realized, oh, this equipment is going to happen like this. Then he gave certain modifications. He says, no, that the chimney, it should be like this, bend, something like that he told. Generally people will say no at the end. Now you will say, no, how you can change at this point of time? It's going to cost me now, design is going to change. That's why you agreed to give additional 1.5 lakh fixed, and bonus also gave 80,000 fixed, increased. Sorry, as a fixed consideration and fixed consideration increased by 1.5, and whatever your cost was there 11, that got increased by 80. Differential is your profit margin. The time allowable for achieving the bonus is extended by 6 months now. Bonus also got extended. Now time also extended. Why? Obviously, I will blame on you only, no? No, sorry, you will blame me only. You are the customer supplier. You say, sir, what come? I would have finished my product. Last moment you come and tell me, now it's going to take time. Okay, chalo, 6 months extra given to you. And it is highly probable that the bonus will be achieved this time, that the contract is still a single performance obligation. Beautiful. But still you will get, now, since you got an extension of 6 months, this time, initially you are not sure whether you will get the variable consideration or not. But since it is extended now, you become confident. Now, X Limited has got an opinion, wants your opinion in accounting treatment of the contract in light of 115 for 11, 12 and 12, 13. Understand the question here. Nice question. Yes, tell me, what is your opinion? What should be the accounting treatment at the end of 11, 12? 11, 12, sorry? Okay, if you pass one accounting entry, at the end of 31st March 2012, any entry do you pass? Will you recognize revenue? How much? No? 65% of what? 20 lakhs. Yeah, please, yeah, I want this discussion, and then let us compare the answer. Whatever comes to your mind, please discuss whatever you have understood this problem. Any confusion, any doubts in the problem, let us discuss first. How much? 60. You are telling 20 lakhs into 0.65. 13 lakhs you will recognize as a revenue. Yes, or you had some different opinion, Vidya. What is your opinion? You will say no revenue recognition only. Yeah, please share your opinion, independent opinion. Yes, Kriti. Doesn't matter. Whatever you say, no, it will not get recorded. Only what I am saying only will, nobody will hear only. I only will hear. 13 lakhs only. Yes, Vishnu Priya. Okay. Now, this is okay. Let us see. Your opinion is you have to account. Okay. Yes, Dhanashri, you have any other opinion? Shruti? Prithvi? When the cumulative catch-up will be applicable? As on 31st March 2012, did you knew that you are going to achieve it? You became sure the moment it got extended, no? It went to 30 months. So cumulative catch-up is not going to come here. Cumulative catch-up may come here. Okay, now you tell me, Now, very important, the crux of the question. First part is fine. What you will do here? Yes, students. So please pause the video and do the calculation and tell me in the year 2012-13. No, they asked you accounting treatment. Because percentage completion they have not spoken. Okay, we'll discuss on it. Yes, tell me how you are going to treat this contract. There is a modification. How do you treat this modification? See, there are three things. Modification means separate, termination, continuation, STC. 1, 2, 3. That is more clear, no? Everybody will speak one thing. Okay, what is others? What is your opinion? Dhanashree is telling we should go for 3. Continuation 3. Yes, Vindhya? Confusing? 3. Continue with the existing cost. That means you have to go for a cumulative catch-up adjustment. Okay, let us see the answer. See, this is what we understand. Yeah, there is no additional because there is no distinct. What you got was a modification and it is not something distinct like, okay, sir, I don't want to buy a product from you, just give me that modification. Meaningless. Followed, no? So that's why it is not a distinct goods or service. See, this is what you have understood and this is what you apply. Again, I always say the communication. How do you speak with this evaluator? So first you say, because they asked you, and I don't know what verb they are going to use, they asked your opinion. Opinion means you have to explain, like you have to give your thought whether this type of accounting is okay or not, or among alternatives, what you will suggest. Now, S Limited accounts it as a single performance obligation satisfied over a period of time. Even though you would not have written this, I am okay. Why? Because this is already part of the question. If they remove that sentence from the question, probably I will expect you to tell here. Otherwise, your explaining further things makes no sense unless you tell it is a single performance obligation over a period of time and use a cost to cost method. Now you expect how much profit? 20 lakhs minus 11 lakh, 9 lakh, and you excluded 2 lakh 50 because you cannot conclude that there is no reversal going to happen. And at the end of the year, some 65% is completed. You recognize 65% of this and the gross profit. So remember one more point. In examination, if at all they give you cost, always by default calculate the profit. This is the second problem we are coming across, where in one of the problems, nowhere they will give me cost. That sale with the right to return for the accounting purpose only they will tell me. Otherwise, when they give me a cost to cost method and they will tell me the cost, no, whether they will ask in the problem, because previous question they asked you that 5-year problem. Specifically they asked you tell me the profit. But here if you see the question, where is the question? They simply asked your opinion of the accounting treatment. So this is much theory based. You have to write this theory, single performance obligation, variable consideration we are going to exclude, and end of the year we will satisfy, and this is the profit we are going to make. So this problem should fetch you at least 3 to 4 marks as per me. And out of that, do you think just telling 13 lakhs will you get 4 marks? No, 4 marks will come by explaining all these things, that there is a variable, we are going to exclude it, and this is your opinion. And why you are excluding? Because you are not sure. Next of the year, now the contract is modification. Now you have to speak on the modification. Now the allowable time is also extended, and this time you are concluding highly probable, that's why 2 lakh 50 you include. Contract is still simple modification, and modification as if it was a part of original contract. Why? Because you didn't add anything new here. Total potential consideration to be changed. Fixed consideration plus completion bonus. So now how do you going to account it? S Limited has satisfied 60.6% of the performance obligation. Okay, how? A new learning for you through this RTP. They say that rupees 7,15,000 actual cost incurred. How did you get this 7,15,000? Do you have the breakup? Did they tell you that 7 lakh 15 somewhere? This 65% of the cost, contract cost. Okay, this is estimated. No, you thought it is actual cost incurred in the absence of information. In that 5-year contract clause, they told you actual cost. In this question, they didn't tell you. So if they didn't tell you, you will take your expected cost into 65%. This is an assumption. So 7 lakh 15 actual cost incurred compared to 11 lakh 80 total expected cost. Entity recognizes additional cumulative 1 lakh 54,000 revenue. How? Your total contract cost becomes 20 fixed plus how much additional 20 fixed? 1.5. This becomes 21.5 plus, did you get the variable now? How much is the variable? 2.5. So total 24 becomes fixed consideration. Now total 24 becomes transaction price. 24 into 60.6%. Okay, how did you get 60.6% here? 7.15 divided by 11 lakh 80 because the estimated cost got increased. So whatever you performed up to 30th June, the 31st March, it was 65%. Because of the cumulative catch-up adjustment, this performance came down to 60%. So you should have recognized on a cumulative basis only 60% of increase in the consideration. So 1,54,400 will be the cumulative catch-up adjustment. See, the probability of this question coming to you is low because right now this is nowhere in the study material, but very new, beautiful concept. Understood, no? Any doubts in this question? So there is a change in the consideration also, change in the cost also. The moment cost changes, the percentage of completion will fall down, and accordingly you apply this percentage of completion. And what accounting entry you will pass? What accounting entry you will pass? Is this increase in the revenue or decrease in the revenue? How did you get? 60.60% comes to 24 lakhs minus how much you have previously recognized? 13 lakhs. This becomes, okay, increase in the revenue. Should you not pass any accounting entry for this? What entry? Did the customer pay? Contract asset you can say, or customer account debit to revenue. Which date? 4th June. The day this contract is signed, on that day you pass this additional entry. And why did you pass this additional entry on that day? Because you have treated it as a continuation of existing contract. Why? Because no distinct was added, but the contract terms got changed. Clear? Yeah, that is already part of this. No, that is why you increased it by 2.5. And okay, you treat, if it is a change in accounting estimate, as per Ind AS 8, how do you account a change in accounting estimate? Prospectively. So when did you change that estimate? On 4th of June. So you have to account it prospectively right now. You don't go retrospectively. See, the moment you say retrospective, it is previous year's first day. That you don't do here. Then life is going to become still miserable. Nobody want to become, everybody after clearing CA want to join all departments of the organization except financial reporting department. If that's going to happen. Because work will never finish only. Whole time you are going to slog there preparing balance sheet, financial entries, computation, retrospective effect, reclassification. Life will be finished. That's why they gave these relaxations that you can apply prospective. But see to it that management does not play with it. That's why they say estimation should be consistently followed. Okay, are you clear, students? Okay, one examination question. This to your job only, and that too in May 23 only it came. On 1st April, Z enters into a contract to construct a facility, consideration 30, incentive 3.75, expected cost are 16.6. At the inception, contract, single performance obligation, and highly probable reversal of cumulative will occur and highly susceptible to factors. Z Limited action. Oh, it's the same question. Which one? But wait, this question came in May 23. By that time, was it there in RTP MTP? Yes. In May 22 RTP, October 22 RTP, and recent April 23 RTP MTP only it came, and immediately in the next examination they asked you this question. Not everything, one you will find like this. Due to uncertain condition, however, on 15th of April, contract is modified. The fixed consideration enhanced to 2.25, increased to 1.2. Contract period is also extended by 6 months, and probable that you are going to get the award. Compute. Did you see the difference, Baba? Always I tell you, no, don't trust the questions, RTP, MTP. See the word called compute here. Very clearly that you have to calculate the numerical values there. As per applicable, and when they say compute, you need to have that previous workings. As per Ind AS 2 for the financial year 22-23, revenue from the contract, contract cost, resultant profit. See the clarity what they bring. Show me this in the question. That's why what happens when we see RTP, MTP question, we just ignore that because we don't see that relationship between what question they ask and what answers we see. But the exam questions will be drafted keeping the answers of the study material or RTP, MTP. Followed, no? Now, additional revenue, catch-up adjustment. Oh, see how compassionate they are. No confusion. They only told you on the date of modification on 15th of April 22. Yes, students. Now, please pause the video. And this question came for 6 marks in the examination. So, do it. You have understood now? Previous question, everything? Yes, do it. Let us compare the answers. Yes, students. So, let us compare. And before we proceed, I would like to ask you only one thing. Is there any catch here? What is the catch? Year. Followed, no? What was the catch? What did you observe? Sorry? And the completion, where is that? 31st March 2022, 65%. Okay? But in the here, very specifically, they asked you 20 to 23. What did you do? Ultimately, see, this is the truth everyone faced at that point of time. It's not specifically targeted to one student there. What did you do? I want to test now. What did you do? Okay. Let us compare the answer. Let's compare the answer. It's a 6-mark question. Okay. First thing I will ask you, did you get this 19.5, 10.72 and 8,77,500? See, I expect somebody should interpret this as a print mistake. Or you observed it. See, genuinely you observed it, so there is a problem here. What is the strategy? When you got confused now? Did you follow what I used to tell you continuously? I want to put it in your mind. That's why I'm repeating every time. You get confused at any point of time. Yes, step 1, don't touch this. Keep this last. Step 2, literally you don't know what to do. No? Do you remember the study material pattern, study material question? Yes, no, obviously, Baba. Already 2 times you in the RTP, MTP you have seen, and just 1 month before in the MTP also it has come. So it must be there in your mind there, and you have seen that this is one nice question, nice concept. So I expect students to just dump this, irrespective of whether they have really asked or not. Yes, any mistakes done here? Okay, one thing you didn't do. Okay, oh yeah, what is the mistake? You took 16.5 as the cost. Okay, that is the casual mistake. Okay, I will call it by casual mistake. Okay, any other mistakes? Didn't do it only. So understood now? See, now we are leaving to the luck. If institute also thinks that it is a print mistake, one more strategy I told you. Just go and attempt it. You may get some grace mark. If by chance, if it is really a print mistake, no, institute will give you grace marks. So that is one more strategy. Just go and attempt. Enough. But it's the luck. Anyhow, I told you, no. Now let us come to the second part. Is your answer contains 60.6% as percentage completion? See, for me, if you ask me mark allocation, I may give 1 mark for this, 2, 3 marks I am going to give for the first portion. This is the way ICA exams are being held. They don't ask you. You have to interpret it. In confusion, write both. I told you, no, deterministic thinking is not going to work out. Probabilistic thinking, what they must be thinking. The beautiful thing is the audit for this subject matter. At least here you can try to make out. There it is very difficult to make out what exactly they are trying to ask. Then subject matter of interpretation, no? Okay. Did you get this 2,31,600? Percentage of completion, because you completed 65%, considering the cost of whatever, your 16 lakh 50 was the total cost. Now for this 16 lakh 60, there is one additional estimated cost got added, no? 1.2. So total cost becomes 17.7. And how much cost you are actually incurred? 10.72. 10.72 by 17.7, will you get 60.6%? Because for me, if you ask me mark allocation, I would have given 2 marks for this cumulative catch-up adjustment. Look at the question. Other theories I am not much interested. This is conceptual. This mistake is a conceptual mistake. Huh? Sorry? Round off? Maybe 60.6 point something you must have got. I don't know. You just check the number. The 60.6% you must have rounded it off. No, that is the, see, assumption, that assumption may not be working, because very clearly in the question, have they told you cost to cost method? They told, no, in the question, cost to cost method, somewhere they told. Okay, any other mistakes? Okay, anybody got full out of full? Okay, very good, very good. Anyhow, my objective was to show you exactly. See, if I will teach you again, you know that. But I want you to solve it, apply, and again, it's not the question of just what we know. Again, it's the question of what we perceive, what we interpret. At that point of time, how our mind works. So many factors are there. Okay? Yes, so we will move on to the next question. This question is a probable question because this has come in 21 MTP of October 21, and they have given in the illustration also. The growth enters into an arrangement with the customer for infrastructure outsourcing deal. Based on experience, you determine that customizing the infrastructure will take 200 hours to complete at 150. Something like outsourcing they are telling. So this much effort is there. And this is my cost per hour. So they must have fixed the transaction price 200 into 150. After you incurred 100 hours, customer agreed to change the aspect of the project and estimate the hours by 50 more at the rate of 100 per hour. How the contract modification will be accounted? Cumulative adjustment. Very good. By looking at it only you will understand now. Okay, but it has got certain numbers. So, can you tell me, is there any additional amount coming there? What is the cumulative adjustment amount? Yes, students, please pause the video and just calculate the cumulative adjustment amount. Cumulative adjustment is applicable? Yes, no? Yes means that means some amount must come now as a cumulative adjustment. See, you started this contract with the 200 hours and already 100 hours you have finished. Then you went with this adjustment, and this adjustment is among 1, 2, 3. Which one you will choose? Third. Termination of old and continuation of the new. But he is going to change the aspect of the project. No? Is it distinct? That is not given. So what you will interpret now? It is distinct. No, see, okay, let us understand something like this. Let us try to practically, let us try to think. What do you mean by infrastructure outsourcing deal? What do you think by that? Okay, infrastructure means you have got computer systems. They told, please maintain this computer, your antivirus update, this, that, and all. Now, okay, to do this job, okay, there are some X number of computers or whatever it is. They thought, look, probably we may need 200 hours to complete this upgrade of all the computers or whatever. Now, they changed certain aspects of the project. They got some additional high-end servers. They said, sir, we missed this server initially. This server also should have been included. Now, you said, okay, for that additional server, I will charge you 50. Is an additional cost to me. Or maybe, I don't know, they said, along with this antivirus, upgrade this also. God knows what they have done. So, what is that additional hours, what is being spent? Is it distinct? Okay, so if you treat it as a termination of existing and continuation of the new, how do you treat? Okay, okay, understood. Yeah, you will stop it at the 100 and balance amount you add it to the new value. So then you say that 50 into 100 is the new plus how much you have spent 100 into 150. Agreed. Okay, let us see the assumption what the ICA has taken. Maybe I told you, no, only 5% you should trust these questions. In exam, you may add one more new line there, telling that this is cumulative, like we have seen no here. Very beautifully, they have in front of you only, I'll show you, catch up. Show me this word in our study material question, not there. Okay, now the solution here will be, they say that remaining goods, considering remaining goods are not distinct. You will argue with me, yes, but the question is very silent. I can interpret it in another way. Maybe in examination then you may get the clarity. And what is the probability? In examination, if this question comes, the probability it will come as catch-up adjustment or continuation, which will be very high. Catch-up adjustment is very high because I always tell you 95% you trust the answers. Now, if it is catch-up adjustment, okay, are you clear about it is a catch-up adjustment? I will tell you. Now, can you pause the video, students, and tell me how much catch-up adjustment I need to make for the revenue? See, students, why I ask you to do this on your own before I discuss the answer? Because these type of situations you may face in the examination. Just don't be panic. If you think independently, definitely you will find a way out. Your concepts should be good for that. Yes. Whatever it is, I just tell me your number. So, Shruti is telling there is a reversal of 1000. Okay, let us check now. And please, others, please tell me your answers. Okay, 2500 plus or minus. Okay, plus 2500. See, now we start to get difference of opinion. That means there is a difference of perception and difference of methodologies of calculations. This is what exactly happens in exam also. Everybody doesn't look this question in the same way. Each student looks in a different way. And what one problem they have done correctly, another problem they may make mistake. Another problem what others have done mistake, this person might have done correctly. Yes, others, I'm waiting for your opinion. Okay, for you, have you understood the concept of cumulative catch-up adjustment? Cumulative catch-up adjustments means with the modification, how much revenue you should have recognized till date minus how much you have previously recognized. That's cumulative catch-up. Yes, Vidya. Any numbers? Okay, you tell me how much revenue you should have recognized. How much you have already recognized? Sorry? 15,000 you have already recognized. How? 100 into 150. So when you said it's the continuation of the existing contract, okay, how much you should have recognized now? See, what is your total contract numbers? 250. 200 plus 50. What is the total value of the contract? What is the transaction price? What's the transaction price? It is 200 into 150, 50 into 100. How much it comes to? 35,000. 35,000 divided by 250 comes how much? 140. 140 into how many hours you have already completed? 100. How much you should have recognized by now? 14,000. How much you have already recognized? 15,000. This is what you did? Yes. Let us compare. 1,000 is the reverse. It is not required, students, that if you have to solve this problem, you should have seen this problem. Think. That's why, but don't touch this problem first. This is my suggestion to you. Since you have not seen this problem, don't touch this problem first. Think about it coolly, calmly, because when you are already crossed that 1.5 hours thing, no, then a lot of ideas will strike to you. Whatever jokes I am telling in the class, examples I am telling in the class, it will strike to you in the examination hall. Plus, whatever you have learned, whatever you know, it is going to become blend. And anyhow, you are giving it a try. If it doesn't happen, leave no problem, no, because already you have crossed that threshold in first 1.5 hours. Okay, have you understood how this is happened? See, now, after modification, since you are thinking it as a continuation of the existing contract, this becomes your transaction price. This becomes your total number of hours for which you have to pay. So your per hour rates are going to change because previously you have been using hour input method. Input method, no? When you said first me, sir, I have finished with 14,000. You have followed input method, sorry, 15,000. So as per input method, you should have recognized 14, but already you recognize 15, so you get 1,000. Are you clear? What method you followed? Like, okay. Okay, no problem. See, I'm really interested to understand how each is doing. See, of late I realized one more thing. See, when you have taken one problem, the same percentage of discount, no, then it struck me that we should not solve the same problem again and again. That also struck me. So I'm thinking to work upon it so that, no, I'm just telling you, when we are doing, no, see, we have to be careful because we solve same problem again and again. No, we may remember the numbers. One or the other. Otherwise, we have to double the number and we have to talk. That's the best thing. So I'm thinking, so that's why I'm asking you what mistakes you make. Okay, how much you got, reverse percent? Okay, you applied the price, no problem. I'm okay. Okay, tell me. Let us check your methodology. Okay, so how much work is complete now? As of now, 50% is complete. Okay, as per the revised change, how much work is complete? How did you get 42.85? Total 50 divided by 250. 50 hours complete. See, previously it was 50 hours complete out of 200. Sorry, okay. 100 hours complete out of 200. This time 100 hours complete under 250. 40%, no? So 40% into what is the transaction price? 35,000. 14,000. This is what you should have recognized. How much you already recognized? See, if you follow that method also, you'll get the same, no? See, very good. That's what I want to discuss and open up. See, don't need to fix to the ICA method only. Suddenly something comes new. Already we are using already that 60.6%, 65%, we have done. Why don't you apply that method? There also you get the same thing. No, have they told you cost here? The price is not a cost, no, it's the revenue. Have they told you their cost? No, that's what again this is what happened exactly in the previous question. She took, no, this question, no, like what happened here, revenue to revenue you took. No, it's not acceptable. Cost you take, cost to cost is that. Because we have got input method and output method, not revenue to revenue method. Which method, Baba? Then your problem, this they would have told you cost. Perfect. Understood? Very clear, student. A highly probable question, this question. That's why please, this type of questions you have to spend Wherever you see the numbers with the theory, spend more time on that question. Pure theory, 5 marks or 10 marks you will get. That's it, max to max. Yes, one more question. On 1st of April, KLC Limited enters into a contract with the K Limited to provide a machine for 2.5 million, 1 year maintenance service of 55,000. On 1st of October, KLC agreed to modify. Okay, first of all, did you fulfill this contract of machine delivery? Okay, enter into contract to provide. On 1st of October, KLC and K agreed to modify the contract to reduce the amount of services from 55 to 45. So I assume that you must have already delivered this. If you have not delivered, then maintenance services comes where? So I will interpret this question as like on 1st April you entered into contract, at the same time you delivered, and you recognize 2.5 million because it is at a point in time. The other services which is over a period of time, where every month he was supposed to pay 55. Suddenly there is a financial crisis. He comes on 1st October and say from now onwards for next 6 months, instead of 55 I will pay you 45. Now what is it? What type of contract modification it is? Cancellation of the old, termination of the old, and continuation of the new, because it is a series of distinct goods. Okay, but the price is not with the SSP here. So what is your new contract value? First of all, this contract is finished. Okay, don't mix about the 2.5 again. Huh? If I have to talk to you how much is the new contract value, what is your new contract value or new term? Sorry. Yes, why? Because when we discuss in a series of contract, I told you example of this room and new room. If this room also I will take, that room also I will take, then both I will add. But what I do, I terminate that old contract and enter into a new contract. Into 6 months is going to give me, okay, 6 months is a distinct service from the previous one, because it is every monthly service, no? It is distinct. How do you say it is distinct? Because somebody need not re-perform it right from the beginning. But price is not at a standalone price, so I will terminate the old and create a new. So 2,70,000 will be the new contract value. I hope it's clear. Entity AB enters into a 3-year service contract with the customer for 4,50,000, 1,50,000 every year you need to pay. The SSP of 1 year service at the inception is 1.5, and they account it as a series of distinct services. At the beginning of the 3rd year, the parties agree to modify the contract amount as follows. The fees for the 3rd year will be reduced to 1.2. And CD agrees to extend the contract for another 3 years with the 3 lakh rupees, that is 1 lakh per year. The SSP of the service at the time of modification was 1.2. How you should account this contract? What it is the maintenance contract. 2-year contract is finished, and then you say 1 more year was left, you stop it and you change the price which is equal to its SSP, and then you extend it further for 3 more years, and that price is not equal to its SSP. Because question is very silent here. What is the difference between that 120 and 1 lakh? Is it because that discount factor like additional selling and distribution cost is not there? Question is very silent. So what you will assume? Not SSP. Unless they tell you very specifically. Simply don't make assumption, oh, that 20,000 must be that additional service cost which you didn't incur because you are an existing customer. That was meant only for that problem. So how do you going to account this contract? Analyze. Analyze means individual components you have to look and explain it theoretically and tell one number there, because numbers are given. Probably they are asking you the contract value. Nice question, right? Okay, simple. If I cut this sentence, second point, only up to 3rd thing I'll ask you, what it is? Creation of new. Did you get a distinct product? Yes, 1 year is a distinct, no? In a series of distinct, the name itself says it's a series of each distinct. Means the contract is modified, and in the third year, I say reduce the price to 1,20,000. It's a modification, exactly. How do you account this modification? Separate contract. Are you convinced? That's what I want to discuss and make you convinced. If I cut this sentence, that's why, see how beautiful question is this. They mixed it. It was in the original contract. Okay. But what type of contract was that original? Series of distinct. Series of distinct means each of the contract is a separate distinct year. If you got 3 years, each 3 years is a distinct year. You finished 2 years and you said, okay, third year I want to reduce the price which is matching to its SSP. Then you got that third year a distinct year, correct? No? Third year distinct year. Okay, it doesn't make any difference now here. Okay, does it make any difference? Whether, okay, what is the contract value? What is the contract value of third year? Okay, what is the contract value of third year? Okay, if you treat it as a termination of the old and continuation of the new, what is the contract value? That's what I told you. It doesn't make any difference. Okay, it doesn't make any difference from the treatment of the contract in this particular case, because it's just like this top one. You call it termination of the old contract because no new. Okay, your viewpoint also accepted, Baba. See, it's not one thing only we'll discuss. It's the possibilities. Yes, your point is very valid. What you said is, sir, no new distinct goods are added. Fourth year is not added. Agree. Chalo, if this is only a thing, I will say, okay, maybe termination of the old, creation of the new. It is exactly like this. But problem is, there the price was different. Here the price is same. That's why I may treat it like a new. But amount wise, my contract value remains the same. Doesn't make any difference to me. Right now. That's what we can interpret it like this, that we are, okay, you can interpret like this also. See, whatever old contract was there, you terminated it. Why? Because it was highly priced and you entered into a new contract. Yeah, new contract is equal to SSP. So you see it is a new contract. That's why if you see the second scenario, it has got two sentences. Termination of the old, creation of the new. That's what, yeah, in the second scenario, it will not be equal to the SSP. But here, that's what, it doesn't make much difference to you, because the contract value, whether you treat it separately for this type of contract, this may not be applicable for all. Like suppose if I am working on the goods here or some other contract, no, it may not work like this. See now, okay, for your thing, so there is a confusing point. Simple. If they give you SSP is not matching, okay, you treat it as like a termination of the old, creation of the new. If it is, okay, and this type of situation you will not get, where they terminate and get at the exactly same price, because either you will get this question in the exam or you will get this question in the exam. It is a very remote chance they would have given you this with exactly the same price or market price. Or here also I could have assumed, no, after 6 months the SSP changed to this. They didn't give, but can I assume? That's why you agreed, no, otherwise why supplier will agree to cancel it? So that sentence is missing here. Or I can add one more sentence, after 6 months the SSP of the price changed to 45,000 rupees. It doesn't make any, that's what I'm trying to tell, doesn't make any much difference. Anyhow, discussion is important. Since I add this additional contract not at SSP, this becomes account, as per industry you shall account it as a separate contract if you increase the scope at a distinct goods and increase the price reflecting SSP. In the given case, it should not be accounted as a separate contract because the price of the subsequent 3 years were not matching its SSP. It was at 1 lakh. Otherwise, in the exam, if by chance if they would have given you additional price also at 1 lakh 20, yes, this entire thing 4 years you would have treated it as a new contract. So you should reallocate. So you should treat it as a termination of the existing and creation of a new. AB should reallocate the remaining consideration to the remaining services. So you have got 1 lakh 20 in existing plus 3 lakh in the new. So 4 lakh 20 will be distributed for 4 years. Have you understood? If it was, see, understand, 4 lakh 20 will be distributed. That means this 20 also will be get additional distributed for 3 more years. What if that additional 3 years also at 1 lakh 20? Creation of new. Then it is 1 lakh 20 plus 3 lakh 60 for total 4 years. So how much per year? 1 lakh 20. What is your total contract value? How you would have treated? If I would have said next 3 years also it is 1 lakh 20, how would you have treated this contract? New contract. If it is a new contract, what is the new contract value? 1.2 plus 1.2 into 3. How many years you should expend it? 4 years. How much each year? 1.2. That's what. Understand, it is only the languages here to trick you, but my point to you is, that's all, you keep it aside because we are not right now, we need not apply it on anyone there. Only thing is either one among the 2 questions you may expect in the exam. Clear? Yes, so the last aspect is the contract cost. Last but one. Okay, one more thing is there. Okay, students, are you clear or is there any confusions? Yeah. What was the confusion? It's a bit confusing. Okay, what is the confusion here? Is it less than this? If only second thing was given, will you treat it as a separate contract? No, because you added new, but the price is not SSP. So you should have added it with the existing contract. Terminate existing and create new. And when you are terminating existing, how much is left in the old? 1 lakh 50. Because third year price was 1 lakh 50. No. Because here in this contract, you had 2 amendments. See, definitely if you would have added extra, you added extra at 1 lakh, which is not. So you will say it is a termination of the existing. The moment you terminate existing, 1 year was left. What was the value of left for 1 year? 1.5, no. So you would have taken 1.5 plus 3 and total you would have divided it for 4 years. But this amendment happened in such a way, you did 2 amendments here. Okay, because of these 2 amendments, did you get both the effects now? Yes. In this amendment, see again students, these questions are framed to make you confused only. Keep that in mind. Simply don't fall prey to it. Just you try to understand and get one sense of it. See, we can interpret in different ways there, adding more information. Understand, since this 2 things they added here, now should you not evaluate both the things together because it is one amendment now? This is contract number 1, this is contract number 2, or do you have got contract 1, contract 2 or contract 3? How many contracts are there as per this question? 2 contracts are there. This is contract 1, this is contract 2. In this contract, you modified the third year and you added extra which is not matching with SSP. If you mix like this, what do you treat? Termination of existing, creation of old new. Do you remember in lease contract there was one mixture question, consideration also changed, term also changed. Generally, when the consideration changes, we have to use the old rate for comparison, for remeasurement. But in that question, we took the existing rate in lease accounting. Why? Because two things have been missed, and we discussed that we have to give importance to the term. That is the crux. Here, if you look at the contract level, which is the heart of the contract? 1 year or 3 years? 3 years. What is the nature of that 3 years? That's it. That's what they said. It is the termination of the old and creation of the new. Yeah, it is not a separate. It is the termination, because you see, there are two elements sitting in one contract. Which is the heart of this contract? 1 year contract plays a major role, or 2 year contract, 3 year contracts plays a major role? 3 year. What is the nature of that 3? See, you cannot in 90%, what is the substance of this? Okay, forget it all other thing. What is the substance? 3 years is the substance here. Okay. Now in that 3 year, is it a new or is it the termination of the old? That is a very 10% of the case. 90% of the case is 3. Now tell me, is this 90% is new contract or termination of the old and creation of the new? That's what exactly we are discussing in the solution. Since now comes the catch. If you talk about it is the termination of the old, what is old? Not 1,50,000, because in this only, in the 10% they amended that also. So old becomes 120 plus whatever 3 is the new. Convinced? Transaction price is 4,20,000. How? Because my existing contract had got 1.2 pending, and if this clause was not there, 1.5 would have been my pending. Plus new contract got 3 each year. Exactly. That is the point of termination of existing, because this one is sitting somewhere in the existing. Yeah, please. We could have discussed that as a separate. Okay, again, like looking into the substance, whatever. But I hope by now you should have got convinced. Again, if it comes, how many marks it may come for? 5 marks, no? 14 marks will it come? No, why you are worried? Okay, and since so much discussion also happened on this, again you got confused in the examination. What you will do? Just put right, huh? But this problem, there is one, since analyze has come, you have to write the theory. I'm telling you 6 out of 6 you will get, and just tell the contract value. Followed? Yes, the next aspect will be the contract cost, a very small aspect, because till now we were talking about the contract revenue. Now what about the contract cost? There are two types of contract cost called the contract acquisition cost, and recent examination this question came in November exam, and contract fulfillment cost. Now contract acquisition cost are the incremental cost which entity spends to obtain the contract, and if you would not have incurred, you would not have obtained the contract. Do you have any example? Contract acquisition cost means it's only those costs you would have incurred only if you would have acquired this contract. Like for example, borrowing cost, specific borrowing cost. Why did you incur specific borrowing cost? Because you acquired one qualifying asset as per Ind AS 23. That's why we call it specific borrowing cost. Can I avoid this specific borrowing cost? Yes. How? By avoiding this, not buying this qualifying asset, not investing on it. Like this, acquisition cost for the contracts are those contracts you could have avoided if you would not have got this contract. Any examples? That I have to do, no? See, I have to, okay, simple thing. You have to go for taking the loan from the bank. You give your property documents. The bank will send to one lawyer. Okay, lawyer will verify and say property is okay or not okay, and he give the bill. Will the bank manager say that I will pay you this money only if I give the loan to the customer? No. Irrespective of whether the loan agreement is entered with the customer or not, that legal fees has to be, vetting has to be given. It is that we'll see what it has to do. but it is not acquisition cost. Yes, it will go to P&L. Is there any example before we proceed? No, but that's a part of my total renovation cannot happen without AC, no. It is not acquisition cost. It is contract fulfillment cost. There are two types of. It's a fulfillment cost. No, they asked me to install AC. So to install and acquire, no, fulfill, no. Yeah, please, before, I will tell you now, but before, I want you to open up your mind. If I have understood what is contract acquisition cost, do you think of any example? Sorry, any one example, any one, enough. Sorry? Brokerage, exactly. Sales commission. I will pay only when the deal is going to happen, no. Otherwise, I will not, like stamp paper cost. If I enter into contract, then only I will incur the stamp paper cost, otherwise not incur. Whatever it is, but can I avoid that if I don't enter into contract? Will I pay to the broker if I don't finalize the house? No, that's it. So contract acquisition is the contract which you would not have incurred if you would not have obtained. So how should you account? You should treat it as an asset. Why? And if you expect to recover the cost, else charge to P&L account. Why? Because this contract may run for 2-3 years. The contract acquisition cost is similar to your transaction cost, which you amortize, don't recognize immediately. But if you think that you may not get the money back from that, you may not recover from the customer, then you charge to P&L account. And the expedient is, if the contract is less than 1 year, then there is no question of amortization. Charge to P&L account. Understood the contract acquisition cost? So how should you treat that commission agent sale commission? Capitalize. And if first you should see, is it an incremental cost? Could I have avoided? Okay, whether entity would incur cost only if the contract is obtained? No, anyhow I have to incur, then expense. Does entity recover this cost from the customer? No, expense. Now, would the amortization period less than 1 year? This is a practical expedient? Yes, expense. No, treat it as an asset, means capitalize. Yeah, definitely we will recover from because whatever commission I paid, then when I charge to the customer, will I include that commission also with the customer? Yes, exactly. That means, how should I treat it as an expense? No. Capitalize it, keep it in the balance sheet, and if this contract is for 5 years, charge it to P&L account over a period of 5 years for matching concept, because over 5 years you are going to recover it from the customer, not one. If it's little recovering right now within 1 year, charge it right now in the expense. Simple. Are Baba, revenue recognition we finished, contract modification we finished, which you have understood. This is chiller, no? There is nothing, hardly 1 or 2 questions now. That's it. That standards only says that much. Now, what is the contract fulfillment cost? Fulfillment means you pay to the salary to them, you acquire the equipment, cement. These are all the costs incurred to fulfill the contract. If such contracts are not accounted in another standard, like you paid salary to your employee to work on that contract, how do you treat that employee salary? Ind AS 19. Because you didn't get this employee specifically for this. So, if not, then you treat it as an asset and recover this, charge to the P&L account in the pattern of charging revenue, recognizing the revenue. If you cannot bifurcate that employee cost separately for this contract, account it as per 19. So, you're clear, students? So, this, see, if it is you have incurred specifically or like generally, you cannot bifurcate and allocate to the contract, then you treat it as per, like you have used some inventory. Treat it as per Ind AS 2, whatever it is. PP is there separate. But if you have to, if it is not treated as per other standard, then if all the following conditions are met, then this cost also you have to capitalize. Like one special equipment has been purchased, some special people have been appointed only to fulfill this contract. Whatever salary you pay, it should be recognized, or whatever cost you have incurred, you have to recognize over a period or at a point in time. That means if the contract is at a point in time, You meaning, see what this matching concept says. You started constructing one asset. The performance obligation is fulfilled at a point in time. When you will recognize revenue? After 2 years. Now you start incurring cost, and you know that this cost incurred specifically for that cost, that asset. Does it make sense to recognize the cost now when you are not recognizing revenue? Matching concept says what? When you recognize the revenue, recognize the cost. That's why they say that if you can treat it, if it is not treated by other standards, you start accumulating in the balance sheet as an asset. You call it work in progress or whatever. And then the day you recognize at a point in time, you recognize this cost. But for this, following conditions should be fulfilled. Cost should be directly related to the contract, and you can specifically identify like renewal, design, depreciation on the specific tools, etc. Or the cost generate or enhance the resources of the entity used to satisfy the performance obligation. That means they should have been added, or it should have given you capacity to to deliver the goods, and entity expect to recover the cost. Any theoretical, not much application wise. So first of all, did you incur the cost which is scope of other standard? Yes, other apply other standard. Other, is it directly related? No, other standard, expense it. Does the cost generate the enhance the resources? No, expense. If all the three conditions fulfilled, yes, you treat it as an asset. So you have got two types of contract cost. One acquisition cost, another is the fulfillment cost. Acquisition cost by default will be treated as a assets, and you expense it over the period of the contract unless the contract is less than 1 year. Fulfillment cost, if it is specifically related to this, you treat it as an asset, and then you spend it over a period of the contract. You treat it as an expense or apply as per other standard. Now, commission paid on signing, only on the signing of the contract. What type of contract cost it is? Acquisition cost. What you will do? Capitalize. This question came in the exam, in November exam. But this question is sitting as an example in the study material. So your job was just to tell, should you capitalize it or should you treat it as an expense? So they gave some list of questions, and you have to write the reason. Reason is because it's a contract fulfillment cost, or if it is a contract this cost. Like bonus on quarterly sales target. Your employees are paid bonus, no, on the sales. Capitalize. Why? Because will you pay bonus if you don't pay, if you don't, what is that called, if you don't make the revenue? Maybe that's what you need to figure out. Or alternatively, you may give certain specific contract based bonuses. We don't know. The question is very silent here. Agree. I got your point. But again, we have to apply our mind. Are they speaking specific contract or is they speaking general contract? Commission paid to the sales manager based on the sales made. That is also you have to capitalize. Which one you should not capitalize? Traveling expense paid to the salesman to pitch one new client, to go and talk to a client. No, charge it as an expense, because that cost may give you contract, may not give you contract. But you cannot avoid that. You cannot tell the salesman, oh, if the contract comes only, I will reimburse your flight charges. Next time you will not go only. Legal fees to draft the contract parties to sign, because parties can walk away at the last moment, but you have to pay the lawyer fees there. Salaries of the salespeople who exclusively obtain new clients. You may get new clients or may not client, because all these instances, in your examination, you have to write the reason that these costs are incurred regardless of the whether contract is obtained or not. And these costs are associated, incremental cost, because we are going to incur only because contract is there. If contract was not there, we would not have incurred this. Amortization of the capitalized contract cost should be consistent with the pattern of transferring. Like if the contract is for 3 years, whatever you treat it as an asset, spread it over 3 years. Which percentage of completion or whatever. If you have used cost to cost method to recognize the revenue, use cost to cost method to recognize this contract fulfillment cost and contract acquisition cost which you have capitalized. Exclusively obtain new client, but did he, what if he could not get? Should you not pay him whether he gets or not get? See, we have dedicatedly kept one person to talk to the new people and get new clients. But See, there can be two components in his salary. One is fixed salary every month. Second, performance salary. If he gets new client, I will pay him something. Fixed salary should be charged as an expense. You cannot, because which contract you will assign? Performance salary? Yes. This is like this. Are you clear? Yes. One theory question is there. Contract cost. Customer has outsourced the information technology data. Probable question in the exam. Because see, you cannot expect what will come. In fact, what they asked was not the illustration question. They asked in the examination the example question. Now, customer outsourced its technology data center. How many years? 5 years plus 2 years renewal. Average relationship is 7 years. That means generally, whenever they renew, they generally renew it. So, what is the contract term? 7 years. Now, entity spends 4 lakh rupees for designing and building the technology platform needed to accommodate the sourcing. And the breakup is design service, hardware, software, migration, testing, 4 lakh. How should you treat this cost? Design services. How do you treat this? Now, is this design contracts are specifically for this contract? Is it a contract acquisition cost or fulfillment cost? Fulfillment. Are you planning to recover this money from the client? No, out of pocket, free of cost you give. You will charge, no. This is your cost of contract. Okay. So, how do you, and is it covered by any other standard? Is it your intangible asset? No, because this is meant, that's why you say that design services are assets under 150. So, when you have paid design charges, what accounting entry you pass? Bank credit, debit, contract asset. Otherwise, if this provision was not there, what entry you would have passed? P&L account debit. Now, question comes when you are fulfilling, Baba, this benefit of this expenditure, are you not getting over next 7 years? That's what exactly this standard is telling you. If this was not told, you would have charged your P&L account. Where is the matching concept here? Revenue you are recognizing over 7 years and design cost you are charging to the P&L account. Now, hardware cost, is it contract asset or is it PP as per Ind AS 16? PP. So, it will go as a depreciation over its life, because this hardware you may use it after this contract is fulfilled. No, sorry, no, see, again the question is very silent. If this hardware is specifically meant for this, you could have treated and spread it over 7 years considering its life. But if you assume this hardware's life is 10 years, you will continue to use this after this asset is also finished. That's why you will treat it as a PP and every year charge depreciation to the P&L account. Because whether you will use it for the contract, you don't use it for the contract, the asset is getting depreciated. So, you will not treat it like a contract asset. But this hardware is specifically meant for this and you are going to scrap that hardware after 7 years. Then instead of PP, or you say PP, but charge depreciation over a period of 7 years. Because you will not going to keep this asset more than 7 years with you. Understood? The third one, software. It's an intangible assets. Treat it as per Ind AS 38. And migration and testing. Migration and testing is generally a cost. But you are getting a benefit, you treat it as 150. Are you clear? Intangible asset, yeah. Testing of hardware, generally, again, it can be part of this also, intangible asset also. Again, just one question. If it comes, you can just, okay, we can give more interpretation, but my suggestion is focus on what assumptions. These are all, they are taken assumptions without telling what company, what it is. Or no? Now, one new example has been added. A software company is in your new syllabus. Huh? Software company agreed to pay special commission of 1% of the contract value to some sales consultant who agreed to work based on the successful bidding of the proposal to a customer. In case contract is not signed, for whatever reason, there is no commission to be paid. The contract value is 1 crore. Over a period of 3 years, company has signed the contract What is the accounting difference between 115 and AS9 with regard? AS9 is your revenue, no? How accounting treatment is different here? Theoretical question, but I believe very important because with numbers they have explained. Now you say that in the first year of operation, see, very nice question, high probable question in your attempt. They are talking about the difference between 115 and 9 for one particular expense treatment. Your contract is 1 crore and how much money you have spent? Commission? 1%. So if it is 115, how do you treat? You amortization of the expense 33.33 lakhs. Okay, how much it comes to? 1 crores 1%? No, 1 minute. What they have done? Contract value is 1 crore and you have paid 1%. So contract asset is 66.67 lakhs. No, there is a, yeah, 1 minute, 1 minute. See, maybe print mistake. Okay, what is this? How do you interpret this? And what treatment we should do? What is the accounting treatment? Difference between, in which regard? Which difference they are asking? Cost, commission, correct? Because the heart of the question looks like commission. But did you see here 33 lakhs it seems? 33,000, no. 1% of 1 crore comes how much? 1 lakh. So 1 lakh has to be spread over how many years? 3 years. So every year 33,000, 33.33 thousand should be charged. Or contract value, treat it like a 10 crore. Now if you go and tell institute, they say it's the printer's mistake. We gave 10 crore correctly, that printer has eaten that 0. There are no accidents. Huh? That's why I'm telling you this can be highly probable, because this creates a confusion. Because both will exactly match with the value of the contract. Somebody will not understand what is the amortization of expense and contract asset, because it is matching with the contract value. See here they give contract acquisition cost. That means contract value should be 10 crore. No? Did you see here? Contract value is 1 crore and you pay 1% of the contract value. It should be either 1 lakh. And if here they say 1 crore, that means this you should interpret as 10 crore. Students, see, they make you, anybody they make you confused unless you observe here very carefully what exactly it is. So understand it is a print mistake, and you should feel very happy in fact. Why? High probable questions in the examination. This is what they do, intentionally giving print mistake. So you would have treated it as a amortization of the expense, and balance you would have treated as an asset. Very clear? In 115, full 1 crore in AS9 you would have treated as an expense. The moment you charge it as no more accounting in the future year, but in the second year, again you will take 33, and at the end it becomes 0. Have you understood with this example very clearly the contract acquisition cost accounting and how it is different also? Is it not a unique question with the print mistake? So you have to mark it important. I'll share this book, question 60. But you understood, no? Again, while going also you will get confused now when you are revising also. Then remember what we discussed in the class. Yes, so we will move on to the last aspect of your Ind AS 115, which is your service concession agreement. Understand this concept, because already this question has come in your old syllabus examination, and little bit confusion here and there is there in the study material. I'll explain you. What is service concession agreement? The service concession agreement includes a private sector entity, we call them an operator, constructing infrastructures used like public roads, bridge, hospitals, airports, or operating and maintaining the infrastructure like toll. Now you got toll projects. Have you seen this? Construction contract for the road may be see, generally who does this public infrastructure? Government does. How? It is called a PP, public private participation. Once upon a time government themselves used to invest money and develop all the infrastructure. Now the government decided, look, my job is to monitor Baba, to collect the taxes and see to it that law order is there. Why should I get into all this construction? So they will call, okay, are anybody private people interested? Okay, we'll have one. I am a PWC department. Yeah, you bid and you do the construction. It's the government contract. Government will give to the private operators. Now for them also revenue should be recognized. It's the same standard. Because for them also India's may be applicable. So one special treatment is given. A special aspect is there in the 115. Understand this. This is not applicable to our local tender coconut seller, satellite seller and all. Why? Because the mode of considerations are little different here. Now, there can be two types of contract, either construction contract or operation contract, maintaining. Now, the operator is paid over the period of the arrangement. Now, how to account? There can be two types of consideration called unconditional contractual right. Like government says, I will pay you fixed amount of money. How much? 200 crore for this road. Alternatively, government may say, look, you construct the road, you start collecting money from the public. But problem is tomorrow public may not go from that road. If I give that, if 200 crore rupees, if not collected, I will pay minimum 200 crore. This is risk, Baba, understand. That's why life rewards only those people who take risk. Somebody from the private sector comes and say, make a guesswork, okay, should we take or not? Yes or no? Yes or no? Chalo, I will take this risk. That person is rewarded. And he may go for utter toss also in this project. That's what life is all about. Now, in the second case, government gives the guarantee that look, if the public do not pay you this much, minimum so much I will pay. More than that, you collect how much government or public pays you. In both the cases, it can take this form or it can take this form. I have got one right to receive money from the government and I can go to the Supreme Court also to get this money from the government. Because it's a contract between me and the government, no. Tomorrow government can say, I will not pay you. How government can say, I will go to the Supreme Court, no. And Supreme Court is going to order that. Because we are both are bound by the Constitution of India. Now there can be second scenario where government says me, it's called a conditional right. They say that I will give you a license to charge the users. Like you have constructed a bridge. Whoever wants to use the bridge, you collect a toll from them. But don't come back to me asking, sir, people didn't come, what to do? That is your risk. So there can be primarily two models. One is called a financial asset model, another is called the intangible asset model, which you will not find in your study material. If you understand that there are two models, the solution, it strikes to you just like you like drinking water, you understand what exactly they are trying to tell. So the right to charge is not an unconditional, because public people may not use, no. Can you force public use my bridge only? They may take one ferry and go there. That's why the money what I am going to receive in the second arrangement is conditional of public using. It's not unconditional. Are you clear? So in service concession arrangement, either I may get conditional or unconditional or a combination of both. Now if it's the conditional part, unconditional part is called a financial asset model, and I have to account as per 109 at fair value. I have to recognize government as my customer. In unconditional, since I don't have any customer there, because my customer is unseen, that's why I should recognize license as an intangible asset as per Ind-AS 2038. Are you clear? Because who has to pay you money? Who told you to construct the road? Who is your customer? Government only, no. So government may tell you two things. Look, Baba, I am not your ultimate customer. You collect the money from the ultimate customer. Now government is the principal or an agent. No, that you should think, no, because that principal agent doesn't apply to government, it applies to you. Okay, but government may say that I will pay or my general public are going to pay. Let the airport authority pay you. You construct an airport and give to the airport authority. That arrangement can be anything. If it is financial arrangement, that means unconditional contractual, right? Your accounting entry, because first you should have constructed. To maintain, you should construct, no. Your accounting entry for construction will be financial asset account debit to construction revenue. Why? Because sure shot, government is going to give you 200 crores. The moment you complete construction or on a partial basis, whatever you call cost to cost input method, you will pass this accounting entry. Are you clear? Then during the operation phase, you pass the accounting entry, financial asset attributable to operations revenue. Simple. What's the difficulty? If it is an intangible asset model, intangible asset account license as per India's 38 account debit to construction revenue. And during the operation phase, there is no intangible asset. You get the bank from the, because here sure shot you are going to get money from the people, from the government, because it is an unconditional construction during construction phase. And without this phase, can it happen? Operation happen? Road itself not constructed. If you are not constructed the road, you put one toll and say, give me toll. Who will pay you? After completion, toll. Simple. Government to the operator. And that goes with the question. We'll discuss one question. Operation revenue also, it can be take two forms. If I say operation part you collect from the general public, then financial asset doesn't come, this account comes straight away, bank to revenue. So that's what I told you, here it can be combination. It can be any combination. So construction phase can be financial asset model, operation phase may be revenue model. But it cannot happen that construction phase itself, I'll give you license and operations I will collect. No, that license is of no use to you. You have got the license has got a value only if you can collect from the general public. Are you clear? Government, sure shot. Sure shot. In intangible asset model, general public are going to go you, but you don't know how much. It can be 10 lakh rupees per day, or it can, and if that corona comes, then 0 rupees per day. That's why either one among the two will be operating for you. That's why when we solve the problem, no, there's only one question, okay? And that only one question came in the exam. How to account the cost? Construction and the operating cost should be treated as per 115. Again, break up into acquisition cost, fulfillment cost. And we have understood. Now, since you have recognized amortization, intangible asset, should it not be amortized over the period of the 10-year license? Yes, during the right. Now, borrowing cost you might have incurred. You are an operator, from where you will get the money? You might have borrowed. Now, the standard says that if it is a financial asset model, treat that borrowing cost as an expense. Why? Because Ind AS 23 says that your financial asset is not a qualifying asset because it is ready for use. But if you have used an intangible asset model, you can capitalize it, but not beyond the construction phase. Why? As Ind AS 23 says, till when you can capitalize? Till the asset is ready for use. So once the road is ready, stop your borrowing cost. But that applies only for intangible asset model. Anyhow, they are not asked the questions on this part. Intangible asset is a qualifying asset. No, it will take time to, because on day one only I know how much money I am going to get. No, here do I know how much money I am going to get? Yeah, you have ready for use, but can you use without construction of the road? You remember, for this part I should tell you, in borrowing cost only we discussed it. Okay, license, if it has got a standalone functionality, it is not a qualifying asset. But if that, we discussed it, if that license is part of a project and that license you cannot use unless the project is complete, yes, the borrowing cost incurred to get that license, you can capitalize. Yeah, my PPT, you go and see, this point is there, very nice. See, if you would not have asked me, I would have gone. See, now try to go back to that particular standard. Which one? Ind AS 23, and see, I have told you this particular point. Now, contractual obligation to restore. Array, at the end of 10th year, should you not restore that property? Will you give one road with the holes? No. That's why as per Ind AS 37, you have to make a provision every year. Dismantling cost, Ind AS 16. It is an expense to the P&L account. But this will start when? From the time operation starts. Why? Construction period, there is no dismantling cost. No? Once the asset is ready, you got into an obligation to dismantle it. Or not, it's not a dismantling cost. It is a restoration cost because asset would have been destroyed like over a period. So you have to make a provision. Anyhow, you need not focus much here. We'll solve one question, how it has come. Okay, with this we would have done with this beautiful standard, loving standard. Yes, take out question number 18. Yes, A Limited is in the business of infrastructure and has got two divisions called the toll roads and the wind power. The details of the business, Bilwara Jabalpur toll project. Okay, one toll project is going to happen. The company has completed the construction of the project in the current year, and below are the details of the concession agreement. What is this? Service concession arrangement, SCA. Toll expenses incurred during the project, total expenses incurred is 100 crore. What for? Construction product. The fair value of the construction service is 110 crore. What is it for? Revenue. That means if you don't want this, you want to sell this construction work because you got a right now to receive money. You are given to somebody would have given you 110 crores. Total cash flow guaranteed by the government over the entire life is 200 crores. That means with the construction and operation, government will give you 200 crores. Can we get the breakup? How much is to be allotted to this? How many performance obligations are there? What all those? Construction, operation. At a product level, at a contract level? 2. Because okay, both are different type. One is series of distinct, one is the distinct. Maybe. Now should I not allocate? Yes. How much? I may probably allocate 110 to this construction service because its fair value was so much, and balance amount I may allocate to the operations. Now the finance revenue on the financial asset to be recognized is calculated by the EIR of method, and it is 15 crores. Now you must have recognized one customer. How? Present value of the future cash flows. When the government is going to give you 110 to 200? Maybe at the end, somewhere at the future, not immediately. So you recognize one financial asset which you need to amortize. And if you amortize, they didn't tell you or ask calculate the amortization schedule. The amount of income is, interest income is 15. And the balance income, what is this balance income? 200 crore what the government guaranteed, minus 110 what you allocated to the construction, and 15 interest component is related to the services during operation. That means 75 is your operational income. Now who is going to collect the toll? Are you going to collect or government is going to collect? No, you may collect. Whom you should take? Whose bank account you should credit? Your bank account or government's bank account? Government. See, understand, because this is a financial asset model where government said, look, you construct and operate, I will pay you 200 crores. And whatever toll collections you give, you credit to my account. For doing that job, I will give you 75 crores. And for construction, I will give you 110 crores. Since I am not paying you immediately, since I will pay you in a EMI, I will pay you additional interest of 15. Have you understood this question very clearly? Any doubts? If that is the case, why government will give you 200 extra? Why 75 they will give you extra? Mad or what? Government is also intelligent, no? Not super intelligent. No? Sorry? Total 200 will be given by the government, not 1 rupee more, 1 rupee less. 100, yeah. During operation phase, do you incur expense? Maybe. How much? Chiller, no? What is that cost? 4 people, and that too now salary also you need not pay after FASTag has come. And somewhere some hole is there, you go and fill the dammer there. How much cost you will incur during maintenance? That's why they didn't tell you. Yeah, they could have told you that during operation phase so much salary cost and so much FASTag cost and all incurred. But they didn't tell, leave it. Why? Because when the government offered you 200 crore, should you not bifurcate between two types of services what you are giving? Have they told you SSP here? No. If SSP was told, you would have distributed based on SSP. That's why you will allocate out of 200, 110 based on the fair value of the construction. That means the moment your construction is complete, you can recognize 110 crores of revenue, or maybe over a period, God knows. I hope you are clear. Yes. Second, there is a Kolhapur-Nagpur Express. One more road. The company entered into another concession agreement with the government of Maharashtra. The construction cost of the project is 110 crores. Fair value of the construction cost is 200 crores. Same story. But numbers, you see how beautifully they draft. Previous was a financial asset model. In that 200 you have to bifurcate there. In this is the total 200 crores, construction cost, fair value. Okay, now did the government told you that they will give you 200? No. The said concession arrangement is a toll based project and needs to be collect the toll from the users of expressway. Entire money you collect it, whatever you get, whatever amount you enjoy. So there is no bifurcation. Now what would be the classification of Bhilwara Jabalpur project? Theory. As per applicable Indians, give the reason. What is the classification of Nagpur project? Theory. And suggest the accounting treatment for the preparation as per about 2. Okay, we'll quickly write the theory. 1. Bhilwara Jabalpur project. A landmark question. Bhilwara Jabalpur. Here, second part of the question. What? During the year and finished. No. Where is that? They incurred 50 crore expenses. One minute. Yeah, nice thing you told me. Yeah, students, very nice that you have brought to my attention what was the content there in the book. Yes. So there was one more additional content here, that under IGAP, the company has recorded such expenses as an intangible asset in the book. Okay, I should have kept quiet. Okay, then there would have been one nice funny thing. Anyhow, I don't want to speak anything about this. We didn't discuss also, okay. Then under IGAP, A Limited recorded expenses as an intangible asset. One more addition. Here also I don't want to add anything. I don't want to really discuss anything with you. Other than these two additions, which is there in the new study material, because if you go there, see my comment there at the bottom. I said that previously, in the previous syllabus material, below details were given: finance revenue recognized, balance income. Okay, I think they have removed this also, I think. Yeah, this particular portion also they must have removed it. That 200 minus, there was one sentence, no? Previously I showed you one sentence, 200 minus 110 minus 15 is equal to 75. This content was there in the previous study material. In the new study material, they removed this sentence and they added this one thing extra. But anyhow, if I knew that this is that I missed to change here, others I would not have discussed this also. Anyhow, I have discussed. Now tell me, students, other than this new point, in whatever we discussed, are you clear? Where is that? Sorry. Earlier, this was there, no? Total expenses. This sentence was not there in the previous syllabus study material. This 15, no? Yeah, this was not there. So imagine that I didn't discuss also. Let us see now whether this sentence has got any implication in the solution. Let us see that, no. If it was there, I should have explained to you. This is the first question. So other than this particular sentence, are you clear with whatever other things we discussed? That's my question to you. Other than this last sentence, are you clear with whatever we discussed here? Clear, no? Okay. They asked us the classification. So right. Now I want to tell you what they do. So for this I should limit certain discussions. Okay, one, Bhilwara project. Here operator has contractual right to receive cash, correct? Hence recognize what? Here the operator has got a contractual right to receive cash from the government for doing this concessional agreement, service concession arrangement. Hence, what operator should recognize? Financial asset. So this is the classification. With this, your first question is answered. There are 3 questions. Are you clear? First question is answered. Okay, in probably I will write more theory. Operator has got a contractual receive right from the and agreement is enforceable by the law. Hence, the operator is going to recognize the financial extent to the extent of the contractual right to receive the cash. Now, what is my contractual right to receive the cash? 200. And did I fulfill my performance obligation? Yes. The moment you deliver the road, you recognize financial asset for the road and then for the other thing. Next, we will go to the second question, Kolhapur project. Here, in Kolhapur project, operator has got which right now? Right to charge general public. In this case, he doesn't have a contractual right to receive cash from the government, but he has got a contractual right to charge to the general public. But such rights are unconditional. Can you force the general public to give the money? No, it is pay as per use. Hence, recognize intangible asset. This is the 2 models I was speaking about. So the first model of Bhilwara Jabalpur is a financial asset model, recognize financial asset, and the second model is a what is that called? Intangible asset model, and recognize intangible asset. Further, amortize over contract term. Since you recognize intangible asset, you should kill it. If you recognize financial asset, how do you kill financial asset? Or will you keep that forever in the balance sheet, any asset? How do you kill a financial asset? There are 2 ways to kill it. Either expected credit loss, reserve for bad debts, or amortization schedule. You prepare an amortization schedule and kill it. Or you kill it by doing write-off. How do you kill an intangible asset? The only way is to amortize or impair. Impairment. So impairment is nothing but reserve for bad debts for the financial assets. So your operator has got a contractual right to charge the users, but it is unconditional. Second is unconditional, no, unconditional right, no. Can you put a condition to this general public to use my? It is not, okay, you can write in English like that. Such right is not an unconditional right to receive the cash, or such right is an unconditional right. It 1 minute, let me see. But this is what your standard, like, okay, understood. But if you see the study material, I just showed you study material. See very clearly, that is what they are also telling. Maybe it's a print mistake. Yeah, your interpretation is correct, but it is an unconditional. It is yeah, correct. No, it is not an unconditional. If I remove not, does it make sense? No. So it is not an unconditional right. No. Okay. If it is not an unconditional means it is a conditional right. Okay. Understood your English. So it is a conditional right to receive the cash. But the language what we need to use is a not an unconditional right. Why? Because the standard or whatever ICA study material is using that language. Doesn't matter. Somebody understand well and good. So you have to recognize intangible asset and amortize it over a period of time. Are you clear? Yes, with this we have answered the second question. Now we have to give the journal entries for financial asset model. Now during construction, what entry you pass? Journal entry, Bilwara project. First, during construction time, financial asset account debit. How much? Year end 110. 2. Construction revenue. When you ask me, sir, you must have incurred some construction cost. What about the construction cost? Cost of construction debit to bank. Cost of construction account debit to bank. What should I do with the cost of construction? In bracket I will write P&L. What did they do? Out of that some 50 crores something, some story they have told. Are there some capitalization, intangible assets? Okay. Now I say my cost of construction I should take to P&L account. No, when a revenue I am going to take to the credit of the P&L account. What should I do with that cost of construction? Take to P&L account. How much? 100. How much you incur? 100 you incur. Take to the P&L account and recognize revenue of 110. Are you clear? See, it is simply to confuse they have given you. Then they should have asked one more fourth question. Is the treatment of the cost correct? Then your opinion would be no, wrong. They should have treated that cost to the P&L account rather treating as an intangible asset. No, that may be a wrong treatment. This is an assumption. See, again, I have to tell you the background. What I showed you the first time, no, that was the study material question. This question, same question came in the examination. Next question. But when it came in the examination, they added that sentence. Now imagine, same question came, people should jump. But that one sentence made people to think. What to do? What is your strategy? Exactly. That's exactly that works here. Huh? Now, if you sit and think there, you are lost. Worst case scenario, if you would have done whatever was done in the study material, you would have won. Now, in the new study material, what they have done, you know, that old study material question is removed and the last examination question is pasted. So, in the study material itself, they have created a confusion. So, in your attempt, what they may do? They may remove that 50 lakh intangible asset and they may give you that question. See, rule is simple. My observation is like this. Study material question is simple, straightforward. You expect twist in the examination question. Study material question itself is confusing. You are asking 100 questions to me, sir. What is that intangible asset? What answer I will tell, Baba? I just keep quiet and say, this is what solution, this is what they have done. In exam, what you can expect? Remove that sentence, then they will ask you that question as plain as it is. Okay? I'll show you the study material question also after this. But see, student, one thing is having strong understanding. That's very much needed. Another is understanding the rules of the game with whom you are playing. When you have got an understanding, you are attending interview. That is totally different with having the same understanding and attending an examination. Agree with me? Because both the rules are different, no? So first thing, understand the rules of the game. Expect how the interview questions will be asked to you. That questions will be totally different from the examination question. Here, who is setting examination question? ICA. So understand how ICA sets the examination question. They try to create a confusion in you. They want to make nervous. They will give you, they have got different strategies. That's why they interview. You treat like an interview only. It's like an interview. They humiliate you. Where? In real life interview. But that is their strategy. Somebody asked me, okay, I attended one interview of one company. They asked me one question. Why you want to join our company? I said something, I merger acquisition, I want to learn. They said, your company is only doing merger and acquisition. Why don't you stay in your company only? Slap on my face. But that's the way it works. Interview time, they humiliate you like anything. In ICI question, they don't humiliate you. They set traps for you. So, understanding is same in both the places. Is it different? No. But the way you have to react is different. That's why first understand. See, these are all the traps what they do, which I am demonstrating to you, not here in one question. Almost every examination question, consistently I am showing you, look, this is what is there in the study material. This is what. So at the end, if you develop that mindset of moving into probabilistic thinking rather than deterministic thinking, I say my efforts are paid off. Clear? Okay, this is general entries are clear? Yes. No, you can. Okay, if it is an intangible asset, then pass one more entry, P&L account debit to intangible asset, because your construction is finished. How long you will keep that intangible asset? Which intangible asset? Maybe they must have treated it as a contract asset. Interpret it like this, no. As per 115, can you treat some expense as a contract asset? If it is specifically related to the contract. What is the nature of a contract asset? Tangible or intangible? So you can treat like whatever you have accumulated there, you can pass like this. Cost of construction account debit 50, intangible asset, they must have done intangible asset. Then you might have to credit to intangible asset and debit to P&L account. Ultimately, when you recognize 110, every cost should have gone to P&L account. After this, you cannot treat it any intangible. Or alternatively, you can treat something like certain assets were there, which were intangible, which will continue after your construction also complete. But the question is very silent now, which intangible asset is it? So it is a pure trap to make you confuse in the example. With that opportunity I missed by they making amendment in the study material. And you brought it to my notice. So I changed this question. Otherwise, I would have given you one, what is that called? What do you call for that? One, we say virtual reality or something. One virtual type of scenario I would have given you, as if you are facing examination question. A simulation. It would have got a simulation. Anyhow, we'll continue. Are you clear now? Yes. Now, during operation phase, now we are finished with the construction. During operation, you have got a finance income. So, right, financial asset account debit. How much? 15 to finance revenue. See, today, if any student sees today's new study material question, will not understand what this is. If they open the previous study material, they understand very clearly. So confusion is created in the study material. So expect clarity in the exam question. This is what I can tell you at this point of time. Then you have got an operation revenue. Again, financial asset account debit to operational revenue. How much? How much? 75. How did you get? 200 is what government guaranteed you, minus 15 was for the interest income, minus 110 is for the contract, which you are supposed to do in the new syllabus, because the information is not given to you. And the last one, you receive the money from the government, bank account debit to financial asset. And government is called grantor. You are called operator. Are you very clear with the financial asset model accounting? Anything have we left out other than that 50? 50 has got no relevance only, okay? At the end, I'll show you the solution. Nothing they discussed about 50. Even in suggested answers, so nothing. This is what they have discussed. Now we will move to the Kolhapur project. Construction phase. What is my journal entry? Intangible asset account debit 200 to construction revenue. Because fair value of the construction revenue was 200. Then cost of construction debit to bank. How much? 110. So with this, I can draft the construction P&L account. Are you clear? During operation phase, today's day, I think when you raised this question, where is the operational expenses? Maybe in the examination they may give you, say operational expense account debit to bank, finish. Now we will come to the operational phase. Amortization cost, because entire 200 are to amortize over next 10 years, debit to intangible asset. Correct, no? Since I recognize, previously how did you kill it? By receiving bank account debit to financial asset. But here, since I recognized intangible amortization cost, intangible asset, I should amortize it over next 10 years. Did I incur any operational cost? Question is silent. If it was there, operational cost account debit to bank. What about my operational revenue? What entry? Bank account debit to operational revenue. How much? Put 2 question marks. And write one note. Amount in entry 4 is kept blank as no information is given in the question. Yeah, Vindhya, you had some doubt. It is over a period of 10 years. Every year 20, 20, 20 like this. We are giving journal entry over entire 10-year period. It is 10 year. Simply say for the sake of accounting, we are giving it. And they didn't even ask the journal entries, but in the solution they are given. Even in examination, they don't ask you. Since you remember this odd question, you have to give the journal entries. Previous slide you want. See, very importantly, students, when you are passing these journal entries with the numbers, are you both clear, no? Why and why that measurement? No doubts? And you have given this note also. Like I'll show you this study material solution. See where they have put that 50 there. See the same journal entries. Solution didn't change from the previous study material. Only the question they added it coming from the examination. And last they gave one note there. Note and entry kept is blank. See, for me it took time to understand what they did the first time when I was preparing. Then when doing research, I came to know that there are 2 models. That made my mind open. Oh, there is a financial asset model and this model, where somebody PwC and Y and all they discussed somewhere in the note document. Yes, are you clear, students? Yes. So please pause the video and do this Ludhiana Chandigarh this thing. See. I have told here in study material question, second point of gap adjustment thing, no, that is not given. That means it came as a surprise to the students in the examination. Yes, so please read the question yourself, understand it and solve this. Let us compare the answers. Yes, students. So we'll compare the answers. Okay, one more thing here. Chalo. Since we didn't discuss anything, and you also know that there is no accounting implication, have you understood what you are supposed to do here? Okay. It goes like this. See what they said under I gap. What is your I gap? You'll assume accounting standard. So under accounting standard, they did one treatment to the expenses in one particular way. But what they are asking you, what should be the accounting standard as per treatment as per Ind AS? So what did they do in accounting standard? Why you are bothered? Are you going to prepare the balance sheet as per accounting standard here? Financials are going to come as per the Ind AS. So ignore it. Ignore it from two sense. Accounting Ind AS, accounting standard, what I am supposed to do? Say for example, IGAP can be Ind AS also. Because it is a whatever, like generally accepted, no? Indian generally accepted accounting practices, which can be accounting. So you assume that they must be speaking about accounting standard. You interpret it like this and ignore it. Or you say that worst case, I have not seen this in my study material, or I have seen this in study material, but they have not done anything there in the solution. Don't do anything. Otherwise, I don't think so any other twist is there in the question. Correct, no? Other than this. Okay, so let us compare. First, you have told that the first Ludhiana project is a financial asset model. Have you told this? Because there is a contractual right to receive the cash. Yes. How much out of 8 marks? Maybe probably 1 mark will be given to this. Then you said that the Bangalore project is an intangible asset model because you don't have any unconditional right. Or you have got a conditional right. 1 mark for this, and the rest of the 6 marks may probably go to this. So during the construction phase, you have passed financial asset to construction revenue 220. Cost of construction to bank 200 as and when incurred. So we are going to pass one cumulative entry for the entire period. Did you write these two? Okay. Let us see what they have done. Total expenses incurred 100 crores. Estimated is 200 crores. It should go on 100. Yes, maybe they have missed it. What should go in the bank is only 100. Okay, let me show you the new study material. It's the same number, no? If I go and show you the same problem, the same study material problem. So how much? You said, they said twisted it 50 crores here. And total expenses incurred is 100 crores. And incurred total expenses during the current period is 50 crores. Okay, here that they didn't tell you during the current period, but they told estimated 200 crores. So this is a print mistake from the study material point. So I suggest that you should enter 100 crores. Suggested answer also don't go by on its face. They want you to make confused here there. What you say? Will you pass entries on estimation basis or will you pass on actual basis? And here, did you see here one beautiful thing they said? As and when incurred. Why they have to give this? What you incurred as and when? 100, no. Okay, understood, insured? During operation phase, financial phase asset to financial revenue. Financial asset to revenue, operational revenue 100, which is 350 minus 30 minus 220. And the bank to financial asset. Have you got these entries? Okay, so one more thing we learned. Either I can give 200, but with the bank I should write as and when incurred. If you don't want to write this sentence, then write here 100. Then I will move to the Chennai Bangalore Express. Cost of construction to bank 150. Intangible assets to revenue 200, and you amortize that intangible asset 200. At the end, have you given this 2 question mark and pass this entry? Arre Baba, in study material only they have given, I have shown you. Because we may underestimate that type of things in the study material because it looks very odd, but that exactly what they do. And they expect you to do it in the exam also and write one note, maybe half mark or 1 mark, they want you to write this. Because this is given from the suggested answer. Understood? See, this is a very small standard from the practical point of view. So we have, I told you, no, don't you feel like Mahabharata now? Condition, one condition to connect with another condition, so many conditions. So with this, I'm happy to and proud to say that we are done. Only 19 or 20 practical standard, but rest all are the theoretical standards. And I showed you also examination questions, how it's going to come. It's a theory based prominent thing. Every year it's going to come. And one more last thing, don't touch it unless you know it very well. Okay, students, did you like this? Okay, one question I want to ask. Given 109 and 115, which you liked? Huh? 115? Okay, first time, huh? Somebody I got on a company. Which one? 115? Oh, very good. So many companies, huh? First batch, huh? All batch, I don't know. People unanimously opt for 109 and no support for me. See, for me, I told you before I started the standard only, I told you, nobody can draft a standard like this, beautiful standard. 109 is specific. It is relatable. You should not ask question to me. Just go and look outside. You get a lot of examples how it is. And I told you, no, from a T seller to one satellite seller, it's the one standard. Yes, thank you very much.